Welcome, everyone, to The Deep Dive, your shortcut to being truly well-informed. Today, we're taking a deep dive into Ciena's fiscal third quarter 2025 results. They're a key player in high-speed networking.
Absolutely. And it was a quarter that really sent a clear signal to the market. We've dug into the earnings call, the analyst takes, and we're here to unpack the financials, the strategy shifts, and what it all means looking forward.
Especially with AI just completely changing the game for network demand, right?
Exactly. We'll focus on how Ciena is positioning itself right in the middle of all that.
Okay, let's jump straight into the numbers then. And the headline, pretty undeniable. Ciena had a powerhouse Q3. Just smashed expectations.
Smashed them is right. I mean, revenue came in at $1.22 billion. The consensus was looking for, $1.18 billion, so well above.
And that's up 29% year over year. Pretty hefty growth.
Very hefty. And the bottom line, adjusted EPS, even more impressive, 67 cents.
Against expectations of 53 cents.
Yeah. That's a huge 91% jump compared to last year. And even adjusted gross margin, that ticked up nicely too, 41.9%, about 90 basis points better than they guided.
So strong delivery across the board.
Absolutely. It wasn't just a beat. It felt like a real confirmation for the street.
And confirmation is maybe putting it mildly. The market reaction was immediate.
Oh, yeah. Swift. Decisive. Shares surged, around 20% in pre-market?
And closed up over 23% on the day, $116.92, I think, on huge volume.
Huge volume. Clearly, investors like what they heard. It points to a really dynamic story unfolding here.
Okay, so those are the stellar numbers. But what's really driving this? The excitement, the performance. Boil it down for us.
Well, if you had to pick two letters, it's AI.
AI.
Yeah.
It's everywhere. But how is it hitting Ciena so directly?
It's more than just buzz here. It's like the fundamental engine. Management was super clear. AI enablement, cloud buildouts, that's what's driving the need for speed. Think about it. Cloud providers are sinking billions into LLMs, GPUs, all that AI infrastructure. But those GPUs, they need to talk to each other, right? They need to access massive data sets super fast.
Otherwise, they're just expensive stranded asset.
Exactly. Stranded assets. The network isn't just secondary anymore. It's the critical connective tissue. It unlocks the value of those AI investments.
Got it. So Ciena is basically providing the essential plumbing for the AI revolution.
Kind of the picks and shovels, yeah. They're right at that critical point where AI hits the network bottleneck.
Okay, makes sense. So let's talk specifics. They highlighted a couple of big industry-first wins this quarter with cloud providers. What were those?
Right, two key ones. The first is an AI interconnect project. It's for what they call a scale-across architecture.
Scale across.
Yeah, think connecting GPU clusters that are geographically spread out, maybe across North America, for example, for training these huge AI models together.
Wow, okay. That sounds complex.
It is. And they're using their RLS platform that's reconfigurable line systems and their latest WaveLogic 6 nano 800 gig ZR pluggables.
Okay, RLS and WaveLogic 6 Nano. What's special about the nano pluggables there?
The insight there is performance in a tiny, power-efficient package. For hyperscalers, density is everything. More compute, less power, less space. Nano helps them pack it in. It's an accelerator, not just an enabler.
And the RLS platform, you said reconfigurable. How does that help with AI?
Yeah, the reconfigurable part is key, but it's also about the intelligence. AI workloads are bursty, right? Unpredictable demand. RLS lets the network dynamically allocate resources when they're needed, so those expensive GPUs aren't just sitting idle waiting for data, it's adaptive.
Adapting to the AI workload.
Right.
Got it. And this project, they put a number on it.
They did. Initial shipments started, and they expect it to ramp to hundreds of millions of dollars.
Hundreds of millions from just this one project.
Just this one. Over the next several quarters, that's a massive vote of confidence.
Okay, hundreds of millions is definitely massive.
Right.
What was the second big win?
That one's for something called DCOM, short for out-of-band data center management solution.
GCOM, yeah.
They co-developed it with a hyperscaler. Imagine these huge data centers, thousands, tens of thousands of devices.
Right.
DCOM lets them monitor, manage, even reconfigure servers and switches using a separate, secure network. It doesn't interfere with the main data traffic.
So the management stuff doesn't slow down the actual AI work.
Exactly.
So-
Critical for latency-sensitive AI. Plus, it improves scalability, saves power, saves space. All huge deals in these giant facilities.
And the potential there.
Also expected to be in the hundreds of millions. Again, just for this one customer initially.
Wow.
And on top of that, another major hyperscaler placed its first big order for their 400 ZR Plus pluggables. Ciena's now a lead supplier there too.
Can you just quickly explain the significance of those 400ZR plus pluggables? Why is that a key win?
Sure. 400ZR Plus. Think of them as the standardized workhorse for connecting data centers, usually within the same city or metro area.
Okay.
Becoming a lead supplier shows they can execute on both the really cutting-edge custom stuff, like the AI interconnect, and these high-volume, more standardized deployments, shows their breadth.
Okay, this sounds like a huge tailwind from the big cloud guys. But they also mentioned neoscalers. What are those? That term caught my ear.
Yeah, neoscalers, it's a great term. It describes this emerging group beyond the usual hyperscale giants.
Like who?
Think AI compute specialist companies just focused on providing GPU power, or specialized cloud and edge providers, even smaller data center or colo companies building out AI capacity.
Okay. A whole new tier.
Exactly. Ciena sees this as a rapidly growing new market. They're positioned to catch that wave as these guys scale up. And they've already landed multiple new wins with these neoscalers.
So it's another source of demand, diversifying beyond just the biggest players.
Right. A potentially very significant, durable new demand source.
And the interconnects portfolio overall sounds like it's on fire.
It really is. It's a massive growth engine. They're on track to at least double revenue year over year in fiscal 25 for interconnects. Double. And then they expect to at least double it again in fiscal 26.
Wow. Back-to-back doubling.
Yeah. And it's broad-based. Pluggable shipments alone are up 140% year over year. Plus, their WaveLogic 6 Extreme platform, rapid adoption there too.
Extreme. That's the long-haul stuff.
Right. Pushing huge data volumes over longer distances with fewer stops, basically. Cuts complexity, power, cost. Critical for the kind of data AI generates.
How many customers on that now?
60 customers. And port shipments doubled just quarter over quarter. They said it's the fastest ramp they've ever had for a coherent technology. Really shows their innovation is hitting the mark.
Okay, so cloud and AI are booming. What about the traditional service providers, the telcos? Are they still in the picture?
Oh, absolutely. Still a very important, steady part of the business. 3 of their top 5 customers in Q3 were service providers.
Okay, so it's still significant. What's driving their spending?
It's a mix. Some renewed core network investments, but also, interestingly, demand for something called MOFN.
MOFN, what's that?
Managed optical fiber networks. Think of it like Ciena designing, building, and running dedicated fiber superhighways, often for cloud providers or big enterprises.
Ah, like a private managed network.
Exactly. Guarantees performance, security, latency. Crucial for sensitive AI data or key enterprise apps. Service providers are also involved in building out AI capabilities at the network edge.
So even service provider spend is being influenced by AI and cloud.
Increasingly so. Hyperscalers might be around 50% of the business in FY26, but service providers play a crucial diversifying role.
Got it. Okay, let's shift gears slightly. Ciena also made some big strategic moves this quarter aimed at profitability and efficiency, right?
Yes, a very clear strategic pivot. They're doubling down R&D investment on the hot areas, coherent optics, interconnects, coherent routing, solutions like DCOM.
The stuff we've been talking about.
Exactly. And they're actively pulling back from their residential broadband access portfolio, specifically the higher capacity 25 gig PON stuff.
PON, that's fiber to the home. 25 gig sounds fast. Why pull back?
It is fast, but it's a different market, lower margin, different competitive landscape. They're basically saying our core strength, our biggest edge is in these ultra high speed optical interconnects for data centers and core networks. Let's focus our best people and money there.
Makes strategic sense. Focus on where you have the biggest advantage.
Right. And this led to a $90 million non-cash charge in Q4 for that R&D they're essentially writing off. A clear signal of the shift.
Okay, so redirecting R&D, what about general costs?
They're also doing a workforce reduction, about 4 or 5% of staff. That's aimed at operating efficiencies. They expect about a $20 million restructuring charge in Q4 for that. Combine that with improving gross margins. They mentioned things like selling previously reserved inventory, lower tariff impacts, supply chain optimization, and it all points towards better profitability.
What are they targeting for gross margin?
Around 43% in fiscal 26. It's a clear upward trend they're aiming for.
And how does this all tie into their bigger picture financial goals, specifically operating margin?
This is pretty significant. They're pulling forward their long-term operating margin target of 15-16%.
Pulling it forward. By how much?
By a full year. They now expect to hit that 15-16% range in fiscal year 2026.
Oh, okay. How?
Through operating leverage. The plan is strong revenue growth driven by all this AI demand while keeping operating expenses basically flat in FY26 compared to FY25, around $1.5 billion.
Grow revenue faster than costs. Classic leverage.
Exactly. It shows a lot of confidence in both the top-line momentum and their ability to manage costs effectively as they scale.
So putting it all together, market wins, strategic focus, accelerating margin goals. How well-positioned does this leave Ciena?
I mean, incredibly well-positioned, you'd have to say. They have that technology lead 18 to 24 months with WaveLogic 6 and RLS. That's huge in the space.
A big moat.
A big moat. They're a critical enabler for AI infrastructure. Plus, the industry structure is better now, less fragmented competition, and their vertical integration in optical modems gives them flexibility and helps them scale production to meet this incredible demand surge.
Okay. So the market loved the results. The company has this strong outlook. AI is the massive driver. What does this mean for investors looking at Ciena now?
Well, first, there's visibility. Record orders, strong backlog that gives them confidence looking out well into the second half of 2026.
Okay.
It supports that preliminary FY26 outlook, around 17% revenue growth year over year, hitting their 3-year target a year early.
17% growth on top of the strong growth they're seeing now.
Right. Management's core messages: this isn't just a short cycle. We're in a multi-year, durable network investment boom fueled by AI. And networking, they believe, will grab a bigger wallet share of global tech spending.
A fundamental shift in spending priorities. That sounds incredibly bullish long term. But you mentioned analyst takes earlier. I saw some notes about a divergence watch. What's that about?
Yeah. That's the interesting wrinkle. Despite the stock jumping over 20%, the average analyst 12-month price target didn't really move much. Stayed around $92.
So the stock price ran way past the average target.
Exactly. It suggests maybe some lingering skepticism among analysts. Are they unsure if this growth is really sustainable long term? Or if the margins can stay this high? Or maybe they're just being conservative, waiting for more proof points.
So the market's pricing in aggressive growth, but the analyst consensus hasn't quite caught up yet.
Precisely. It's that classic stock running ahead of the consensus, creates a potential gap, or maybe an opportunity, depending on your view. It's definitely something for investors to watch.
Okay, perfect setup. It's time for our This Is Not Financial Advice segment. Pitches an outrageous but plausible trade idea, hedge fund style.
All right. Given everything we've discussed, the blowout quarter, the AI driver, that divergence watch.
Yeah.
Here's the pitch. Go long, Ciena, with conviction.
Okay. Despite the stock already running up and the analyst caution.
Yes. The thesis is the market, and maybe even some analysts, are still underestimating the scale and duration of this AI-driven network upgrade cycle. Ciena's tech lead with WaveLogic 6, RLS, DCOM, it's formidable. Those hundreds of millions deals, they're just the start. We could be looking at trillions in network investment over the next decade, and Ciena's perfectly positioned.
And the margin improvement.
Pulling forward that 15-16% up margin goal to 2026 with flat OPEX, that's huge operating leverage potential. The bet is that analysts will raise targets as these AI projects become more visible and de-risked.
So the divergence is actually the entry point.
That's the argument. The outrageous part is betting against that ingrained analyst conservatism, betting that they're fundamentally underestimating the AI wave. Significant upside if that proves true.
What a fascinating deep dive. So Ciena's quarter.
Yeah.
Strong financials, huge AI, and cloud wins showing they're really a key enabler there.
Yeah, and that strategic pivot, focusing R&D on the core optical strengths, plus the accelerated path to better margins, it really sets them up well for what they see as this new era.
An era of network investment driven by AI.
Right. The market's clearly excited, but like we said, still maybe trying to figure out just how big and how long-lasting this opportunity really is.
Which leaves a big question for you, the listener. If networking really is grabbing a bigger slice of that projected $7 trillion AI infrastructure spend through 2030, how much further could Ciena go beyond even these strong targets?
And think about this. What happens when coherent optics, Ciena's specialty, start moving inside the data center, not just between them? That's a whole other potential wave Ciena hinted at. Definitely something to ponder.
That's all for this deep dive. We hope this look into Ciena's quarter gave you some valuable insights.
Yeah, remember, our goal is just to give you those key nuggets, help you stay informed. Definitely form your own opinions. Dig deeper.
Until next time, stay curious and keep learning.